How do you make money in the stock market? How do you know if a stock is going to rise or fall? What happens when there's a stock market crash? Do you know how to read charts to make money in the stock market? We'll cover all of those in just a second. My name is Erwin Cito. My wife Cherry and I started Stock Hacker Academy together to help real estate investors and entrepreneurs find great cash flow again. It's our goal to create 10,000 financially free Canadians. If you're on that journey to financial independence too, subscribe to this channel and click on that notification bell so that you see all of our money-making videos. Here are 5 ways to make money with stocks. First off with dividends, but first I have to explain to you what a dividend is. So dividends are paid by companies who have lots of earnings and they pay them to the people that own their stocks. They own shares in the company. So these companies are typically larger, they're mature, they've been around for decades, they're highly successful, and you know what successful means? They have predictable earnings. They make so much money predictably that they can afford to pay out some of that to the shareholders. Now, who decides when and what gets paid? The board of directors. They are voted in by the shareholders. So this is like your group of friends or family that you would ask advice from and how to run your business or maybe some life problems that you have and you ask them how would you deal with it. But these are large, mature, successful companies. So typically their board of directors or board of governors, they're highly successful people with extensive track records of building businesses in management positions. So the board of directors' decision is whether to build shareholder wealth, which is paying out the dividends could be you or I as the shareholders, or reinvesting some of that money to growing the business. Maybe they need to buy more office space, buy more equipment, hire more people, spend on marketing, those sorts of things. Where do you find these type of companies? Often they're banks, utility companies, in energy sector, consumer staples. They can be healthcare or pharmaceuticals. Again, these are all well-established industries that have lots of success, where people just keep buying from. Now, here's strategy number 2, covered calls. So this is a method to generate income using the stocks that you already own. So what you would do is you would sell equal amounts of call options, equal or less to the number of shares that you own. So quick note, one option contract is equivalent to 100 shares. So for example, if you owned 500 shares of XYZ company, you would not sell more than 5 option contracts. To sell more would be highly unadvisable and very dangerous. So you want to do this right, get yourself educated. This strategy is available in tax-free savings accounts and our registered retirement saving plan accounts, also regular vanilla cash accounts. So this is available to pretty much everyone. The strategy is widely available. This is great for when the stock and even the stock market is high. And again, this is a great strategy for when you feel the stock is going to just go sideways or it's not going to continue going up at a fast rate. This is also a minor hedge for in case the stock does decline slightly in value. Strategy number 3, buy low, sell high, or in other words, value investing. So here's an example. Just recently, so this is a chart of the Dow Jones. Some consider this a stock market. This is the 30 largest companies in the US. So here is a graph showing the price movements since 2017. And then there was this whole thing in 2020 called the coronavirus, and then the market panicked and sold off. So prices fell because of fear over coronavirus and what it would do to the economy. So you can see after the price has fallen and recovered a bit, there was opportunity to buy stocks. Buy low, right? Make money when you get in. So here's an example. Here is Suncor. So this is American pricing. This is Suncor. I think most of you guys know this company. They're a Canadian oil and gas company. This screen capture is from April 2020. And at the time, the price of the stock was $14.57. Now, I took the screen capture just recently. So at the time of recording, the stock is now nearly doubled. Also interesting is the dividend pays 4.7%. Now remember, if you had bought the dip, if you had bought low, like in April of 2020, you could have bought the stock for half the price. Hence, your dividend would essentially be double based on what you own the stock for. So your dividend would be nearly 9%. That's not bad. How do you know a stock is cheap? There's something called a Graham number. And here, based on the graph, the stock price is the vertical line, the vertical dashed line. And the Graham number, it indicates what is the maximum value of the stock based on its fundamental value, based on both its earnings and book value. Highly technical stuff. If you like technical stuff, there's this whole book written by Benjamin Graham. It's about this thick. So if you enjoy reading and technical stuff, highly recommend you read this book. Now, who's Benjamin Graham? He is the mentor of Warren Buffett, who is well known as the most successful investor in the world. So he knows this stuff, and he created the Graham number. Another way to make money in stocks is to choose funds over individual stocks. Now, why would you choose a fund? So what are these funds, first of all? There's exchange-traded funds, short for ETF. So you see this in the media a lot, in a lot of commercials. So what this is instead of buying individual stocks in, say, Apple or Microsoft or Suncor, you can buy stocks that make up hundreds of different stocks to give you diversification. By having diversification, you can reduce your risk and you get exposure to hundreds of companies just by owning one single share. Could you imagine if you owned hundreds of different stocks, how much that would cost you? Versus, again, you can own one single stock to have the same exposure across many, many industries. And then also keep in mind, most professional fund managers and traders do not beat the market. Also understand that exchange-traded funds, they are often a fraction of the cost of a professional managed fund, such as mutual funds. Many mutual funds charge 2-3%. A lot of ETFs charge as little as 0.06 or 0.09%. Big difference. Save your money. Some examples would be the S&P 500. So the stock would be SPY. And then the S&P 500 is the 500 largest stocks traded in the US. Then there's the NASDAQ, which is technology heavy. This would be the top 100 top 100 stocks on the NASDAQ exchange, heavily technology based. So that stock ticker would be QQQ. Again, it's an ETF. For Canadians, the TSX, which is basically the Canadian stock exchange. There's two that are popular, XIC or ZCN. Here's another strategy, buy and hold. For novice investors, they tell me all the time, oh, stock markets crash. Yes, they do crash from time to time, but the general trend is pretty strong. So here we have the Dow Jones over the last 20 years. It goes from the bottom left to the top right. It's appreciated considerably. In this time period, it's appreciated almost 3.6 times. So I believe it's gone up. It's here again, same time frame. This is the S&P 500. This is the SPY. So again, it's gone from the bottom left to the top right. The market has gone up. That is the general trend. Here is the NASDAQ, the QQQ. ETF is QQQ. Again, it's gone up from the bottom left to the top right. And for us Canadians, this is the Toronto Stock Exchange. It's gone, again, it's trending generally up. And again, there's been dips to take advantage of in order to generate greater returns over the long term. So thank you for watching. Please like and subscribe. We'll be putting up more videos at least weekly, and we hope to continue educating you all. Thank you. If you're interested in learning more about all the best practices that we teach to our students at Stock Hacker Academy, you can join our free demonstration, completely free, no obligation. It is a more extended version of the demonstration I gave to my kid cousin over Thanksgiving in 2019. My kid cousin is a professional musician, meaning, he doesn't make much money. He has no professional training, and he managed to make 50% return last year and the year before using the strategies that I taught him in that demonstration in my home in Thanksgiving 2019. So if you're interested, there's a link below. register for the next free demonstration. Again, it's no obligation, and I hope to see you there.